Reading the question. On 21st March 2010, Mr. Janak gifted to his wife, Mrs. Thaligam, 200 listed shares, which had been bought by him on 19th April 2009 at rupees 2000 per share. On 1st June 2010, bonus shares were allotted in the ratio of 1:1. All these shares were sold by Mrs. Thaligam as under. 21st May 2010, sold in recognized stock exchange STT, paid 100 shares for rupees 2,20,000. On 21st July 2010, private sale to an outsider all bonus shares for rupees 1,25,000. On 28th February 2011, private sale to her friend Mrs. Hema. Market value on this date was rupees 2,10,000. 100 shares for rupees 1,70,000. Briefly state the income tax consequences in respect of the sale of the shares by Mrs. Thaligam, showing clearly the person in whose hands the same is chargeable, the quantum and the head of income in respect of the above transactions. Detailed computation of income is not required. Net sales value represents the amount credited after all taxes, levies, brokerage, etc., and the same may be adopted for computing the capital gains. Cost inflation index for the financial year 10-11 is 711, and for the financial year 2009-10 632. My own comment: excellent question of 5 marks. So many provisions in one question. Students need to think a lot while solving this type of question. Student can think only when they have read the provisions again and again. Obviously, apart from understanding the concept, memory also matters. Now let us first analyze the question. Janak had acquired 200 listed shares at the rate of rupees 2000 per share on 19th April 2009. On 21st March 2010, Janak gifts these shares to her wife, Mrs. Thaligam. After 21st March 2010, that is on 1st June 2010, her wife is being allotted 200 bonus shares. And if we look at this transaction 1, then in the hands of Janak, no capital gain arises since gift is not treated as transfer. In the hands of Thaligam, income from other sources do not arise since gift is to relative. But in the hands, the clubbing of income provisions gets applicable in the hands of Janak. Wife is selling these shares to some private person. Now, capital gain arising on the sale of bonus shares shall be taxable in the hands of Janak, whereas capital gain arising on the transfer of bonus shares is taxable in the hands of wife Thaligam. Wife Mrs. Thaligam sell these shares in 3 different lots. 100 shares in a recognized stock exchange. Say this is sold to Mr. X. Bonus shares to Mr. Y. It is a private sale, therefore no STT arises. And sale of 100 shares to his friend Mr. Z. Now let us see what happens. Hands of Mr. X, Mr. Y and Mr. Z. Now whether is there any income which arises in the hands of Mr. X, Mr. Y and Mr. Z? That is, whether income from other sources is applicable or not. In the hands of Mr. X, not applicable since the sale is at market price. In the hands of Mr. Y, income from other sources may arise if difference between prescribed fair market value and purchase price is more than rupees 50,000. In this question, prescribed fair market value is not given, therefore cannot calculate. We can assume that this difference do not exceeds rupees 50,000 and hence no other sources arises in the hands of Mr. Y. In the hands of Mr. Z, the difference do not exceed rupees 50,000, therefore income from other sources do not arise in the hands of Mr. Z. Capital gain arises in the hands of Thaligam as under. Mr. X sold in a recognized stock exchange of India 100 original shares. Period of holding 19th April 2009 to 20th May 2010. It is a long-term capital asset. Long-term capital gain STT paid fully exempt under section 10 subsection 38. Now this exemption can be claimed by the husband since it is the original shares which was gifted by husband to her wife. If loss, it cannot be set off. Now sale of shares to Mr. Y, 200 bonus shares was sold to Mr. Y. Period of holding 1st June 2010, it is a date of allotment till 21st July 2010. It is a short-term capital asset. Sale consideration is 1,25,000 less cost of acquisition is nil since it is a bonus shares. Short-term capital gain 1,25,000 taxable in the hands of wife. Sale of 100 shares to Mr. Z. Period of holding 19th April 2009 to 28th February 2011. It is a original shares. Sale consideration 1,70,000. Index cost of acquisition 711 divided by 632 into 2 lakh 25,000. Long term capital loss 55,000.